I used to love surprises. I'm sure you did as well. It's funny though, because as you get older, you end up hating surprises. I mean, think about the last phone bill you checked after a vacation. You looked at all these roaming charges, or when the contractors went slightly over budget, which ended up being a lot over budget. Now with mortgages, surprises can be really costly. I'm talking up to $50,000. So in this video, we're actually going to talk about some real life stories of people who got surprised because they didn't do their due diligence.
Hold up.
When you put in an offer for a home and the seller has accepted your offer and now you're in the subject removal stage, please don't do anything drastic. Story number one is going to talk exactly about how doing something drastic can really put you in a tough position. When you have put in an offer to a seller to buy a home, they will give you something called subject removals. So basically, you've got about 7 days before they take your deposit, which usually is non-refundable. You have 7 days to inspect the property, make sure it has the right insurance. There's a whole list of items you have before you officially give them your deposit, and they give you that time. But the most important one is they want to make sure, and you want to make sure, that you have mortgage financing 100% guaranteed. So it's very important that you get your mortgage 100% guaranteed and with the lawyer before you give your deposit. This first story starts with one of our team all-stars, McKay Wood. He had this client who was during the subject removal phase, and the clients did something, let's just say, very drastic that dropped their credit score almost 150 points, just almost below the 600 mark, which below 600, prime lenders are usually not going to give you any financing. So what was this drastic move the client did? Well, so there's a rumor that if you have too many credit cards, you have a bad credit score. Now, I think if you dig a little deeper, what that rumor actually means is that if you have too many credit cards and you can't manage them and you're over on a lot of your payments, you miss payments, you use too much credit, that's what affects your credit score. But regardless, what the client did is they actually closed 4 out of the 5 credit cards they had. Now the problem here is that credit cards are actually really good for your credit score, because what do? They show to the lender that you're responsible taking credit over many, many years, and hopefully you've paid it back on time, and that shows proof that you have a track record. If you cancel your credit cards, that is gone. So literally the client's score went from like a mid 700, so let's say 760, just above the 600 mark, literally overnight during subject removals. If this would have gone below that, then they wouldn't have got the house, and they spent months trying to find this perfect home. If they wouldn't have had financing, they wouldn't have been able to remove subjects, or else they would have lost their deposit if they gave the deposit and they didn't have financing. So this could have easily been avoided if they didn't do anything drastic, especially during subject removals. This takes me to the second story, where someone really almost did lose a $50,000 deposit.
No, God! No, God, please, no!
So we had a client, and they came to us freaked out, just freaked out of their mind. And they told us, I've already put in my deposit, $50,000, and I thought I had financing. I mean, when I checked with my lender a couple years ago, they said I should be good. But a couple years ago was before the mortgage stress test. And of course, now that they're gonna move in, because this is a pre-construction, their lender said, hey, you actually don't really qualify with the new B-20 stress test rules. So sorry, we actually can't give you financing. And about your deposit, there's not much we can do. The B-20 stress test, what is it? So in November 2016, the government thought to themselves, I don't think Canadians are very good at taking on debt. We need to mitigate that. Okay, here's what we're gonna do. So we're gonna either add 2 percentage points on top of whatever interest rate somebody gets, or we're gonna use our published overnight rate, what is usually 5.19%. And whichever one of those is highest, that's what you have to qualify for. So if you have a mortgage rate at 2.3%, which is very good. If you add 2 basis points, that's 4.3. That's still lower than the 5.19, which can fluctuate, by the way. So they're going to take the highest one there, and you have to basically apply for a mortgage as if the rate was that high, again, in case the rate should go up. That's how the stress test works. Quite stressful indeed, huh? The risk of this story is that the seller was not going to give back the $50,000 deposit, which is actually ironic because usually Canadians pay about $50,000 for the university education. And you would think that the first $50,000 investment would avoid you having to pay $50,000 again, wouldn't it? In the end, what we did is we helped them not lose their deposit. So there are private lenders who will charge you a higher interest rate, of course, but sometimes when it's something this tight and you're about to lose a deposit, you need the money. So they paid a higher interest rate. However, they kept their deposit. We actually made it an open term so they could get out of this loan anytime and, of course, upgrade to a better rate with a prime lender. We coached them through it, which is really important, and then they were able to upgrade. So look, if you want to avoid any of this stress or potentially paying higher interest rates, please make sure that you do get pre-approved, especially given the stress test. Michael Denuzo, who is another rock star on our team, he got a call from, you guessed it, a very stressed out client who basically told him, hey, I got pre-approved, I put in my deposits, now the lender is saying I don't qualify under this B-20 thing. What do I do? So what does Michael do when the client comes to them? They purchased a pre-construction. They used to be pre-approved. Now they're not. They don't really want to go with a private lender. So what Michael did is he actually worked with specific lenders who allow you to be grandfathered before the B-20 stress test rule came into place in November 2016. So luckily, the client did not lose their deposit and they were grandfathered, which was awesome.
Awesome. Yes.
The icing on the cake was they actually got like one of the best rates on the market. So they went from being extremely stressed out to being just over the moon. So what's your next step? Get pre-approved and make sure that you qualify even under the B-20 stress test, of course, and make sure you do it with a mortgage broker. And if you don't know a good mortgage broker, you may know a couple good ones. Do you have a question or an opinion on this? Please leave a comment below. I read them all, and yes, I even reply. Now, if you have a friend who is house shopping and they're about to put down a deposit, please flip them over this video before it's too late. If you learned something new today, or you just don't want to lose thousands of dollars when you're about to put a deposit down, then please make sure you're subscribed and alerted for the next video. And friends, keep leveling up your living.